Today I will be showing you this amazing strategy that gives a lot of winning signals. This strategy made a 65% win rate within a short period of time. I recently discovered the strategy as it uses just 2 indicators, which makes it very easy and user-friendly for beginners. I will backtest it 200 times with an initial account size of $1,000, with a 1.5 risk-reward ratio. If you want to know the backtesting service I'm using, then it is called Trading Rush, and it's officially the best to practice with and absolutely free to use. You can also find important lessons on the app or on their website. It is easy to use and also safe. Thousands of new and professional traders make use of the app. Without further ado, let's quickly jump into the strategy for the day. Okay, we're currently looking at the price of USD/JPY on a 1-minute time frame. And this strategy includes 2 free trading indicators. For the first indicator, let's search for Chand Momentum Oscillator. This indicator by Everget. And for the second indicator, let's search for Cumulative Delta Volume by Lonesome the Blue. So let's head over the settings and make some adjustments. So we're going to double click on the cumulative delta volume and change these bulls to better green and the bears to better red. And for the inputs, we would leave it just the way it is on the defaults. After that, click on the OK button. Now let's make some adjustment on the Chand Momentum Oscillator. Double click on the indicator, change the length to 21. Go over to the style and change this to white, then untick the max and min levels. Untick the overbought and oversold levels and change the 0 level to straight line. Go ahead and click on this button. Okay, so the chart definitely looks much better. Before we get into the trading rules, let's actually understand what these indicators are and how they work. So first of all, let's start with this cumulative delta volume indicator. And by the way, this is going to be our first confirmation indicator based on its signals. We're going to place buy and sell orders if the rest of our conditions are met. This indicator is something similar to Helsinki Ashi. However, it does issue more accurate buy and sell signals during trending market conditions, because its measurements are based on volume. As you can see that this indicator also looks like the main chart, as it uses bars to calculate when there is a bullish or bearish momentum in market, and it would be confirming the general trend in the market. The general rules are simple. If we get a green candle, it means the buyers outweighs the current sellers in the market. And if we get a red candle, there are more sellers than buyers in the current market condition. The second confirmation indicator we're going to be using is this, the Chand Momentum Oscillator. Actually, this indicator works like the relative strength indicator that we all know, only that we would be using it as a 0-line crossed indicator, as we have eliminated most of it overbought and oversold levels. It will help us filter the false signal given by our main confirmation indicator. Okay, now let's actually understand the rules for this strategy. But before we get into that, we need to add the ATR-based indicator, as it would be determining the stop losses for each and every single trade. Okay, so for a long position to be valid, we need to have a new buy candlestick from the delta volume indicator, and the Chand oscillator have to be above the 0 line. And once we have these 2 conditions met, then we are going to go ahead and place a buy order at the highs of the trigger candlestick, and our stop loss will be set at 2 times the value of the ATR. We see that the current value on the ATR is 0.23, so our stop loss will roughly be set at 2 times the value. and we are going to be targeting 1.5 times the risk. Exactly opposite is true for short signals. First, we need to have a new sell candlestick from the delta volume indicator. Second, the Chand oscillator have to be below the zero line. And once we have these two conditions met, then we are going to go ahead and place a sell order at the lows of the trigger candlestick. And our stop loss will be set at 2 times the value of the ATR. Again, we see that the current value on the ATR is 0.20. So our stop loss will roughly be set at 2 times the value. And we are going to be targeting 1.5 times the risk. This is why using an ATR indicator is a really good idea, as it helps us to know exactly where to place our stop losses. For example, if we set our stop loss at the recent swing high, we would have got stopped out. So by setting your stop loss at 2 times the ATR, you give the price action just enough room to breathe. But it is important to note that we only take trades if these conditions are met. We don't take a short trade if the Chand oscillator is above the zero line, and the delta volume signals a buy. Also, we only take trades at the beginning of a new candlestick, if the Chand oscillator is on track with the conditions of entering the trade. If we take a closer look, we see that this strategy is doing a good job at eliminating bad signals. However, it does eliminate good signals as well. We see that this buy signal would have definitely been a winning trade. Also, the same goes for this buy and this too. But we will take a sell here because the oscillator does not agree with this, even though it was a good spot to sell. Now let's go ahead and backtest this strategy using our account size of $1,000. Now for the purpose of this video, I would be sticking to a flat-based stake. But if you are trading in a life account, please always use a proportional staking plan, as it is better than a fixed risk exposure. We just finished the backtesting for this strategy, and we can see that the results are amazing. We had a win rate of 65% in 200 backtested trades, having won 131 trades and lost 69, which made us 132% return on investment. And I found those wonderful trade setups within 6 weeks, although commissions and spread fees would eat up some of the profit in real trading because it was not included in the backtest. So you definitely want to expect that number to be lower when trading life. The profit factor for this strategy is looking good, I guess. And we had 8 wins in EURUsd against 8 losses in EURUsd. So yeah, I'm definitely happy with these results. Okay traders, that's it for today. Thanks for watching, and see you in the next one.